What's up, guys? Leo here from Leo on Forex, back again with another video. So in today's video, I'll be teaching you how to use the Fibonacci Retracement tool to get better entries, more accurate entries, most of all to make profits using it. I'll be teaching you how to use this tool in an uptrending and downtrending market. So without further ado, let's just jump straight into it. Alright, so hopping onto planes here, I prepared something a little special. So first of all, before we continue, what is the Fibonacci Retracement tool? So the Fibonacci Retracement tool is a tool that uses percentages and horizontal lines to give you or to predict a potential support or resistance level where price may possibly pull back. So now I'll show you when to use it and how to use it. For one, what you want to look for is you want to look for an uptrending or a downtrending market. Don't trade the Fibonacci in this. It's not tradable. With that being said, how to use it. So basically, I'm just going to be showing you examples right here. So this tool is not feasible, as I said, in a consolidating or a ranging market. So this would not be good. Would not be good for you if you wanted to trade the Fibonacci here. It would not work simply. It would not work well for you. So this is where you want to trade it. You want to trade it in a market that is moving upwards, creating higher highs and higher lows. This is where you want to trade the Fibonacci Retracement tool. So what you want to do, firstly, you'll try or find an uptrending market, a market that is moving, creating higher highs and higher lows, as I said. So from there, what you'll do is you'll pull this tool from the low to the high, and then this tool will give you something very simple, just different. Okay, it'll give you not 3 levels, but on average it gives you a few levels, maybe 5. So it'll give you this one. Okay, give you a few levels like this. After pulling it from the low to the high, it will give you levels like this. And don't worry if you're not getting it so far, but I'll make examples of how to get it applied. So it'll give you 3 levels, and these 3 levels right here are the 3 golden levels right there. And where you want to enter is when the market pulls back into one of these 3 levels. That is where you want to enter. And if you'll notice, price here on your left, if you'll notice here, price has come back to previous highs and is now testing them, so for a potential move to the upside. And the reason why this works so well is because price does not just move in one simple trend. It does not move once upwards. It moves in the range or in a set of zigzags, and those zigzags can be sideways, which is not good, as I said, or those zigzags can be up or downwards, and that's the only time you can trade this. So this would be the optimal zone for you to enter, and this zone is called the golden zone, where people actually capitalize. Okay. And this is where people capitalize on entering. Okay, I'll make that yellow. So now how to use it in a downtrend. Downtrend essentially is the same thing. So let's just, okay, how to use this in a downtrend. So essentially a downtrend, when the market is creating, lower lows right here, just use that. When the market is creating lower lows, lower highs, lower lows, and lower highs. So where you can use this tool, this is where you can apply it. So remember what I said. You pull from here from the current high, which is a higher high, is a lower high, to this right here, which is a lower low. So when you pull this tool, you'll be pulling, you'll be pulling from here, and it'll give you again these levels. It will give you these levels again. Okay, those are the levels that you're gonna get on your own, somewhat like this. Okay, it's pretty simple. You don't have to draw them on like this. I'll show you in just a minute on actual charts. So, and then price from there will give you, as I said again, will give you the 3 golden levels, which once price gets here, this is now called the golden zone. And this is where you will be awaiting, you'll be anticipating price. Of course, you don't just trade this alone. You trade this with a bunch of other things. Like, for example, you trade this with structure, market structure. You also trade it with price action. But more on that on a later video. And just today's video, let's just focus on this. Focus on understanding this tool. So yeah, so you pull from the high to the low, and then it'll give you 1, 2, 3 levels. Then from there, this is where you'd be waiting basically for price to continue its move. Once price gets there, you're probably looking to sell here at this point, and then it may continue going lower because price will continue going lower eventually. So now hopping on to trading, just give me a second. Okay, remember what I said. What you're looking for is a market that's uptrending or downtrending. That is what you're looking for, and here's what we're looking for. And just to make it simple, I'm just going to make it simple for you guys, and I'm going to use this right here, a line chart. And as you can see, it's not always perfect, but it's still applicable. So here's the tool right here. So if you don't know where the tool is on your trading view, for one, you'll go to your left right here, click here, and at the very top you'll see it's written Fib Retracement. So then you'll take the tool, you'll click from the highs to the lows. Okay, and as you can see, price clearly came back to this level right there. It clearly came back to that level, and that is where you would have sold for a big profit, big potential profits, depending on how well you have learned or applied the knowledge that I'm sharing with you today. So yeah, from there, but your own Fibonacci retracement tool will not come this way. It will be different. So I'll be sharing the settings. Just let me share the settings with you guys. My settings. Okay, these are the only important levels that you should have on your chart, or not on your chart, but on your Fibonacci retracement tool. So for one, you'll have the 0%. 2 is the 38.2%, which is written as 0.382. Then 3 is the 0.618 level, and the 50% and the 100%. So those are the only 5 important levels that you need on your Fibonacci retracement tool. So if you want to set this for later dates, just take a screenshot right now of, depending on what you're viewing on, but I'm pretty sure laptops can also take screenshots. So yes, those are the only 3 levels that you need. So now let's look for an uptrending example. We found a downtrending example, so now let's look for an uptrending example. And it's not always clear, guys. It's not always clear. It's not always simple. But with practice and with time spent with the charts, you'll find that it gets easier with time to identify these things. That's why you need to spend most of your time on your charts, analyzing. That's the most important thing. Analysis, getting familiar with what is in front of you. So because your brain is wired to recognize patterns, and the market always repeats patterns. So anyway, here is an example right here. So remember, in an uptrending market, you pull from the low, click once, to the high, okay, click again, and as you'll see from here, price did pull back into this level, and what it do afterwards, it continued and went all the way up for big profits. For big profits, guys. Big profits. So yeah, guys.
Yeah, so guys, if y'all enjoyed this video, be sure to stay tuned in. Hit that subscribe button, hit that like button. It only takes a second, doesn't take much time at all. So I'll be dropping a part 2 of this video. Not long now, I'll be dropping a part 2 of this video. So if you want to learn how to better apply this to your trading, how to better fix your entries, then you'll want to watch the next video. Mr. Leon, signing out.